Well, if you look at Kotak Mahindra Bank, the stock lost over 2% in trade just immediately post the results, and this is on account of profits being lower than expectations. In fact, although Kotak Bank did report a healthy operating profit growth and also stable margins, the profits came in at 1682 crore, which is far below the ET poll expectations of nearly around 1900 crore. We did see an operating profit growth of 25%. Margins have been largely stable at 4.39%, but higher provisions have been made by the bank. If you look at the overall asset quality, I would say it's largely stable on a sequential basis if you compare it with the proforma GNPA. The Q4 GNPA ratio stands at 3.25% versus the proforma GNPA of 3.27% of the last quarter, and Q4 absolute gross NPA stands at 7,400 odd crore versus the proforma GNPA of 7,100 odd crore in the last quarter. So from that aspect, it is a largely stable asset quality. But do note that if you look at if you compare the Q4 GNPA versus the proforma GNPA of the peer banks, well, I would say that for most of the banks this ratio has improved, but for Kotak Mahindra Bank this ratio has stayed stable. Again, in terms of the asset quality, the COVID related provision stands at 1279 crore. The total cumulative provisions, which is inclusive of all provisions, specific provisions, contingent provisions, etc., stand at 7000 crore, which is at 95% of the GNPA. Bank has been conservative in growing the book. It, as such, if you look at the advances book, it has just grown 2% YOY, but it has picked up on a sequential basis, growing at 4.5% to 2.23 lakh crore. Deposit growth at 6.6% YOY is also lower than the peers, and management commentary here would be very important in terms of what is the outlook on growing the book amid the COVID second wave. Besides that, of course, the entire commentary in terms of how do they see COVID-19 impacting the overall asset quality, would there be a need for higher provisions or not, that would be important. For the entire FY21, in fact, the management has ended with a credit cost of just around 84 bips, which is versus 67 bips for FY20. So from that perspective, that is a good sign. SMA2 outstanding is also fairly negligible at just 110 crores, and also if you look at the overall asset quality, I would say it's stable largely in terms of the asset quality. Consolidated profits for the bank has done well, growing 36% YOY for Q4 at 2589 crore. Bank performance for Q4, that is the standalone Kotak Mahindra Bank performance, has been good. Even Kotak Prime results, profitability for Q4 has been good, along with Kotak Life Insurance as well as Kotak Securities has done well. So these subsidiaries have done well during the quarter. Besides the COVID impact, management commentary on the recent RBI circular on capping the promoter MD CEO tenure would be important from a succession planning perspective, because Mr. Uday Kotak tenure, which has been extended from Jan 2021, would end after 3 years of Jan 2021. So entire commentary on succession planning would be important, but so far it's a mixed results for Kotak Mahindra Bank for Q4.